CNBC-TV18.
Mixed cues from Wall Street. Dow Jones falls almost 400 points, snapping a four-day winning streak. Big bank earnings weigh on equities, with Goldman Sachs reporting worst earnings miss in a decade. Stocks in the Asia-Pacific open largely mixed ahead of Bank of Japan's rate decision due later today. The SGX Nifty signals a mild positive start for the Indian market. The government has learned to be considering lower income tax rates for the rich under the new tax regime to make it more attractive. Sources say a final call would be taken by the Prime Minister's office. Banking major Indices Bank will be reporting its third quarter earnings later today. Earnings momentum is expected to be strong, largely led by a dip in slippages. Baiju Ravindran says the edtech company is not far away from profits, claims the worst is over and the rebound will start in 6 months. Admits to making mistakes but does not regret scaling up fast. Paytm's Vijay Shekhar Sharma also says the company will get to profitability much earlier than the stated target of September 2023, but says profitability will not come at the cost of manpower or business verticals. Good morning. In the Mumbai News Center, I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines, important ones at that, because US opened after a day's break and it did not see any gains. In fact, Dow fell around 400 points, and as a result of which the Asian markets today are quite mixed actually. The Taiwanese markets, they are shut for a holiday today. Hang Seng is declining down 0.6%. It's largely lower as far as the Asian screen is concerned. We have the Bank of Japan rate decision which is slated later today. So that is something that we'll be watching out for, and it'll be important to track as well. But yes, US markets is something which will weigh on the global markets as well because of the way earnings have really panned out. As a result of this, the SGX Nifty is indicating a start in the green, but that also has fallen from the top. So right now it's at the day's low. 31 points higher is what the SGX Nifty is indicating. We did see a recovery from the lows yesterday. It has been some volatility is what we have been seeing. Let's see which way things go for us today. Let's talk about the US markets now. Wall Street ended Tuesday's trading session mixed, with the Dow Jones sliding about 390 points, the S&P 500 down 8 points, the Nasdaq Composite closing with marginal gains of about 16 points. CNBC's Pippa Stevens gets us a wrap of all the action on Wall Street.
A mixed day on Wall Street, with the Dow lagging the broader market due to a big drop on disappointing earnings for Goldman Sachs, one of the 30 stocks that are in that index. The Dow closed down almost 400 points, more than 1%. The S&P, which Wall Street sees as the best benchmark for the entire stock market, ended down just 0.2%. And the Nasdaq, which is highly influenced by big tech stocks, managed to finish with a small gain. It isn't all bad news for big Wall Street banks. Unlike Goldman, Morgan Stanley's profits came in better than expected, thanks to gains from its financial trading division, sending its stock sharply higher. And as the market was closing, Microsoft had no comment on multiple reports that tomorrow it will announce thousands of job cuts. That's the market action in the U.S. Now back to you in Mumbai.
Okay, that's all the U.S. market action and the global updates as well. But let's see how these overnight cues impact our own markets. We have our research team joining in to tell you just that. The trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Vivek, let me come across to you. What is the market setup looking like today?
Well, good morning. It's clearly a divergence that we're seeing between the Indian markets as well as the kind of handover that we are seeing from global markets. So when you talk about US markets, as you mentioned, very soft cues that we are getting in. The Dow Jones slipping quite significantly, almost over 1% is what we actually saw the fall as far as the Dow Jones is concerned. Now coming to the European markets, very muted close, slight positive as far as the DAX was concerned, and that is something that markets will take a little bit of positive cue from. However, crude oil prices, after the brief respite you saw in yesterday's trading session, overnight the close was quite higher, 1.7% higher as far as Brent was concerned. WTI futures up almost 0.5% in yesterday's trading session. Now, as you mentioned, Asian markets, not really giving too much of a direction, but overall, if you're talking about Hang Seng, it's a mixed overtone is how we are looking at. SGX Nifty is indicating a mild positive start. Yesterday, there was some significant activity, especially amongst the heavyweights as far as the Indian markets are concerned. A last hour surge is what took the index higher. Today, some key results is what we'd be looking out for. Indices Bank, Persistent Systems, and OFSS would be the key stocks to keep an eye out for.
Okay, yes, that's right. Vivek, thank you so much for all those cues. Going across to Ekta now. She'll list out all the stocks that will be in focus today. Hey, Ekta, good morning.
Morning. I'll start with a lot of M&A which has taken place overnight. So, for example, ITC is going to be acquiring Yoga Bar with an initial investment of 175 crores. Eris Life is going to be acquiring 9 dermatology brands from Glenmark, which is worth around 340 odd crores in terms of a total transaction. Adani Transmission Q3 update, so they will be reacting to that. RVNL, lowest bidder for a Surat metro project as well as an Ahmedabad metro rail project. Spencer Retail, introduction of a new hypermarket chain. EID Parry, new distillery in the company's sugar unit in Andhra Pradesh has commenced operations. Dishmin, the board has approved NCDs worth around 100 crores. Lot of result reactions today from the broader markets. Delta Corp, Eris Life, Shalby, Tata Metallics, ICICI Pru, ICICI Lombard to name a few. And results today, IndusInd Bank, Central Bank, CCL Products, Persistent Systems, as well as Rallis. So it's going to be a full day of a lot of stocks in focus.
It will be. Thank you, Ekta, for that list. And finally, Nigel is joining in with all the cues from the FNO space this morning. Hey, Nigel.
Well, a quick word first, Sonal, on the institutional flows. Yesterday, the FIs, they turned buyers after 17 straight sessions. And if you look at the institutional number, well, it was a buy number closer on 300 crores odd. So flows were positive yesterday. Why did the markets go up then? On a poultry, 300 crores odd, well, there was clearly short covering that did play out. So on the Nifty as well as the Nifty Bank, there was open interest that was low and both those indices ended higher. The FIs, well, they covered some shorts. They ended long positioning. Now the short positions have come down from around 64% to around 55%. On the option side, well, they're writing puts. And you like that. More than 40,000 put contracts were written yesterday. And on the buying side, well, they bought some mild puts, close on 8,000 contracts odd. It was evident that the 18,000 put was seeing a good amount of addition. The 17,800 put was seeing writing out there. And the 18,000 call writers, well, they packed their bags and they ran for cover yesterday because there was 50 lakh of open interest shedding out there. What are the levels you're looking at? Well, you don't want the Nifty to slump back to around 17,750 odd. So you're counting on the 100 DMA, holding out in the near term. The Nifty should hold about that 20 DMA and then give it a bit of a chance to move towards that 200 DMA. But if that has to happen, the Nifty Bank needs to revisit its 20 DMA, which is around 300 points away from current reckoning. For starters, the SGX Nifty, well, it's suggesting a bit of a bump up. I'm sure at some point of time, the markets will go into the red. The Nifty, you'll see a bit of a downtick. So at that point of time, maybe risk reward, you'll have to see weigh yourself and watch out for the 20 DMA on the Nifty itself. Back to you.
Okay, all right. Thank you so much for that, Nigel, Vivek and Ekta. It's time for a short break now. But as we get into break, let's get you some big highlights from the World Economic Forum in Davos. First Deputy MD of the IMF, Geeta Gopinath, says India is very much on the world stage and is doing well compared to other nations. Also tells Shireen Bhan that labour market is an issue which needs to be addressed.
India is doing relatively well when you compare it to other economies in the world. In terms of our growth numbers, we have 6.8% for this fiscal and 6.1% for next. But again, looking ahead, I see a lot of businesses, a lot of companies who are looking to India as an investment destination as they try to diversify away from other countries, including China. So on the plus side, there's been a lot of progress on the physical infrastructure, a lot of progress on the digital public infrastructure. And I think both of those are making India more attractive as a destination at this point. In terms of issues that still need to be addressed, I would say labor markets, more labor force participation, certainly from women, reducing the youth unemployment rate, just getting labor markets to be somewhat more flexible, more resilient would be very helpful.
Welcome back. Well, the government has learned to be considering lower income tax rates for the rich under the new tax regime to make it more attractive. Sources say a final call would be taken by the Prime Minister's office. Timsi Jaipuria is getting us more details on this one. Timsi.
Well, that's right. What sources are telling CNBC-TV18 is that the government may sweeten the new direct tax regime, which was announced in 2020, to push towards its early adoption. Finance Ministry is considering reducing tax rates at the higher slabs of the regime, which are currently at 30% and 25%. Also, Finance Ministry is in talks with PMO to push these reduced rates in the new direct tax regime, and a final call is yet to be taken. Just to give a backdrop, well, Economic Advisory Council's Vivek Debroy had pitched the need to shift to the new direct tax regime to the PM in November. Task Force report on simplification of direct taxes headed by Akhilesh Ranjan had pitched for lower tax rates and a fewer slabs, and also former Revenue Secretary Tarun Bajaj had told CNBC-TV18 that a complete rethink and reinvention of personal IT, that is the personal income tax regime, is needed, actually the need of the hour, is what he said in his personal capacity and not as a Revenue Secretary. He also said that India must move to a single regime and not have two parallel regimes, that is the old regime and the new regime. So let's see whether government decides to bite this bullet this time, because last time also they were wanting to sweeten the deal, but they could not. So let's see whether Finance Minister Nirmala Sitharaman is all set to announce this relaxation in the upcoming budget on 1st of Feb. Back to you.
Great, MC. Thank you so much for bringing us those important details. That will be important track, of course. But moving on to the big newsmaker from Davos, Baiju Ravindran said that the edtech company is not far away from profits. He claimed that the worst is over and that the rebound will start in 6 months. Speaking to Shireen Bhan on the sidelines of the World Economic Forum at Davos, Baiju Ravindran admitted to making mistakes, but he said he does not regret scaling up fast.
We made mistakes, but there's always an intent to correct it. It's because at the end of the day, we are not building this to get an exit and make a lot of money. I never started this as a business. It ended up becoming one. We are still in that pursuit of how to make it better and better for students. Now, unfortunately, most of the happy students, I always tell that love is private and hate is public, and we've been on the receiving on that. We're not that far away from achieving at group level profitability because that's not been the focus for the last 2 years. If you take a look at our numbers, you will see that from 2015 to 2020, we have moved in the right direction. And then we made all these acquisitions, and a lot of these costs are one-time acquisition costs, apart from the revenue recognition change. And both made FY21 numbers, they look a lot worse than what actually it is, which you will see that the losses are getting almost halved in 22. Almost everyone whom you would have met 10 years back are still there. So it's a, like people say that, yeah, you feel lonely at the top. I don't feel that way. It's been challenging, although I am not romanticizing the last 6 months, for sure. But the worst is over, and it's just a matter of time before. If people are thinking that the edtech is struggling, Byju's is struggling, please wait 6 months.
Okay, please wait for 6 months. Things will see a rebound. From one newsmaker, let's go across to the other one. Paytm's Vijay Shekhar Sharma says the company will get to profitability much earlier than the stated target of September 2023. Speaking to Shireen Bhan at Davos, Sharma also added that profitability will not come at the cost of manpower or business verticals.
We are definitely looking at free cash, profitability, very much visibility, and we have, like I said a number of times, that we have said that it is going to be far before than what we have said. But we are not looking at anything reducing because of that. So lucky to have a business line item that is growing so nicely, and lucky to have a business that addresses large profit pool, and hopefully lucky to become publicly announcing profitability sooner than what we public market quoted.
What is sooner than what you expect?
I publicly quoted next September, meaning Q2 of next year, and we just are finishing like a last quarter of third quarter of this year. So sooner, what sooner can it be? Much before than that. Much before
September next year.
Yeah, that's what I'm trying to say.
Are you looking at global aspirations today?
I think there is so much to do in India that we are very clear that we are not going to do in the rest of the world. In my opinion, why should we waste our prime of our life on doing some other country's good when we have our life given to our country? I mean, I look at it as an opportunity, as a commercial, and I look at it as an opportunity for myself as giving back to my country. What is the only story in the world? I mean, I am going to put only story in the world. Why are we looking at it as a plus one? We are the one.
Okay, that is the word coming in from Vijay Shekhar Sharma. We'll keep getting you excerpts from conversation from Davos through the course of the day. For now, we'll slip into a break. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC TV18. Let's talk all about commodities. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning. New highs on a lot of commodities.
Oh, well, yes, multi-month highs for sure. And I'll start with the crude oil prices, where we've seen 2% of gains overnight, and we're trading at a one-month highs right now. So not only the U.S. crude prices are now above $80 a barrel, but the Brent is trading at $86 a barrel. So a gradual increase is what we are working with for 2023. Both the crude varieties are up by nearly 8 to 9% for the month of January till time. The OPEC report that came in yesterday shows that 2023 demand could increase by 2.2 million barrels per day for the global markets, and that clearly has led to some premium coming back in case of prices. The metals, in the meanwhile, the non-ferrous that is, have continued to gain in any case. You have copper prices now trading at a 7-month highs. We saw aluminum prices gain up by a percentage point as well yesterday. It is all about the low supplies, increasing demand, and lower inventories as well, which has been supportive. If you look at the LME Global Warehouse, that is holding network inventories the lowest in many years, 25 years actually, and we have seen inventories decline by 50% on a year-on-year basis, and that continues to support metals today as well.
All right. Okay, Manisha, thank you so much for giving us that lowdown. That's all about the commodities market. But with that, we've run out of time on this edition of Power Breakfast. And as we wrap the show, we'll get you some more opinion coming in from Davos. Former RBI Governor Raghuram Rajan says a fragmented world economy could mean higher inflation. On India, he says oil and commodity prices going up will be a problem. Listen in.
If it's a weak recession, mild recession, doesn't matter that much. They can cut rates eventually. They probably will sometime when they see that happen. And things will come back up. The real question is, do you unearth more problems as you do that? Financial sector problem or something like that. As China comes back up, commodity prices will, go higher. And that will be a problem for India, which is already running a fairly significant current account deficit. I think the other place where India would benefit tremendously is if we saw, more openness to globalization. One of the places we are doing quite well at this point is in our service exports. And if the world was more open to globalization, and if we could use the G20 presidency to push for greater openness towards service exports. I think central bankers are back in an area that they understand, which is fighting high inflation. I think when they were trying to push up inflation, because inflation had gotten too low, they were in an area where A, they didn't have tools, B, they didn't really fully understand it because they hadn't been in that place for a long, long time.